And good evening traders, and welcome to Trader UK. It's currently Friday the 21st of August 2020 and the time has just turned 1 minute past 10 p.m. UK time. Traders, welcome to the channel. If it's your first time here, I want to welcome you here to Trader UK. Hope you're going to enjoy this little presentation that I'm about to put out. And if you've been here before, traders, welcome back. Really enjoying the back and forth now that's going on in this channel. And as the numbers grow, the people that seem to be watching this channel, I want to make you welcome. I want to say welcome on board. I hope you're enjoying the content that we're putting out. Now, many of you have asked me about the course that I've been talking about that I'm going to be put out. And I was about a month ago now, I was meant to launch a trading course, which I'd pretty much done 70-80% of the work on. And unfortunately, guys, I got hacked. I got hacked, and I still can't believe that I got hacked, and I'd backed up everything, but somehow I've lost pretty much everything that I'd put to one side. So as far as my course is concerned, so what I'm going to do now is I'm going to start from scratch. I wasn't 100% happy with the course anyway, so there were some tweaks that I was going to make on the way, but now I'm starting from scratch, and what I'm looking for is to be launching the course now January 2021. And I'm gonna make sure that it's a course that you're going to enjoy, and a course that if you're interested, you can come and take a look at and see if it works for you. Now, without further ado, guys, what we're going to do today is that the markets have just closed here. It's as I say now, it's 3 minutes past 10 UK time. And what I wanted to do for you today, just so you can see how I trade, is I wanted to show you how I break down a market. Because ultimately what I do is I look for levels in the market for me to trade off of. And when I say levels, I mean high probability levels where I think price may come into and reverse. Now, the pair that I'm going to be, well, it's not even a pair. The contract that I'm going to be looking at is gold. Now, I don't normally talk about gold, guys, but I always keep gold. I always look at gold to see what's going on with gold, as it's what's known as a risk-off. We can't call it a currency. It's a risk-off commodity, okay? And when things get a bit hairy in the world, people tend to flock to gold for the safety of the value of their money. Now, gold, as you know, has been skyrocketing, and the reason that gold has been skyrocketing is you have COVID, you have Brexit, you have a lot of geopolitical situations around the world which are telling investors that they need to protect the value of their money. And gold is, as I say, is a commodity that funds roll into when times are uncertain, and we're certainly in uncertain times at the moment. We've got economies of the world falling off the face of the earth. We've got the British economy here in the UK with the lowest GDP fall off out of the G7. We've got the United States really struggling, and in the backdrop of all of that, COVID numbers are climbing again. So if you look at the world right now from an economic point of view, it looks really bad. So investors, institutions, they understand how how markets work, and they understand that there's considerable risk in the market right now. Gold is a place that they rush to protect their money. Now, what I want to go through here is I'm going to go over into the gold pair. Is I just want to break down gold and what I think about gold. And gold is something that I don't trade very often, but it's certainly something that I'm looking to trade now. Now, here you find we're here on the 3 monthly chart of the gold pair, as you can see here. Okay, and the first thing that I want to do with this chart is I'm bullish gold, just like everybody else in the know. I'm bullish gold, okay? Gold, so there are talking heads talking gold right up to 3,000. If you look at where gold is now, gold is at like 1940. Okay, so people are saying that there's a considerable way for gold to go to the long side. And I'm looking for that play. I've looked at the fundamentals around the world and I agree, you know, nothing's going to change very quickly. Gold is the place where money seems to be rushing into. Silver also, but gold is the one that I'm looking at. So first things first, 3 monthly chart of the gold commodity. Where do I want? I'm going to do this back to front slightly because I'm sort of working top down, okay? And I'm going to go right down and show you how I'm going to look at this pair. So first thing I'm thinking of is, okay, where is my target going to be? Because I base my analysis on the higher time frame. So, and seeing as I'm on the highest time frame right now for me, 3 month chart, the first thing I ask myself, well, okay, if I do get long gold, where is my target going to be? Well, here's how I define where my target's going to be. I take a fib extension of all the data that I've got. I run that up to the highest swing and I pull that down to the next lowest swing. And what I do is I look into an area of what we call equal legs, which is an equal leg swing of this, 127. So equal legs, which is 100% and a 127% fib extension. And what I do is I box that off. And remember, we're here on the 21st of August right now, guys, just looking forward in time. So what I do is I grab this and I box that off. Now, somewhere in this area is where my target's going to be. It may be here, right at the 100%. It may be here at the 127%. But what I know is that is where I'm going to target for in gold. Next, let's just push that back up again. So now what I start to do is I start to go down the time frames to see what I can see, to see if there's an entry. So let's go down to the monthly chart. Okay, monthly chart. Don't see anything there. Let me just have a closer look at this. Okay, don't see anything there yet in gold. 2 weekly chart, don't see anything there. But as I go down the time frames, I look at these waves, guys. I look at the way this market is advancing, okay? And I look for things that I can trade off of. I mean, I don't trade trend lines or channels, although I do use them when I want to know where dynamic support and resistance is. And I'm struggling. Here we go, sorry. And, you know, this comes to mind. You know, look at that. That's not something you want to ignore. You want to be conscious of that. Okay, that sort of thing there you need to be conscious of, because as you can see, as gold climbs, it's respecting this channel. So I'm going to leave that channel in there. I'm just going to make a little adjustment here. I'm going to pull that there. Okay, so that's in place. Down to the weekly chart. As we get further into this, let's just auto this again. Down to the daily chart. Now, what we have here, you will have noticed these green areas here, okay? And what these green areas are levels of what we call supply in the market. Now, supply is based on value, and this area here, okay, is an area where gold was once cheap, and if gold comes back down to again, gold will be deemed as being cheap at this level. I mean, come on, if you go to a sale and you bought something at a reduced price, and then time went by and that item went up in price, and all of a sudden you notice that same item or an item similar was back down at that level, surely you'd have a chance, you'd probably buy more. It's no different here. Gold is a value. Gold is cheap down at these levels, and we have a level here, we have some levels down here, we have some levels down here. Now, let me just get rid of this because it's distracting me. So let me just get rid of that full stop for now. Okay, so all right. So what I'm thinking now is, okay, I mean, here's my first level of supply in this market, okay? And as you can see, here we are on the 21st of August, and this is where gold price is. I only want to buy the market at important cheap levels. Okay, I'm bullish this pair. Okay, and I'm interested in knowing where next to look at buying, potentially getting long with gold. So the first thing that I always do is, what do? I always pull a fib. Here is the lowest swing in this move. And what I do is I pull a fib and I pull it right to the top there. Now, let's just fatten this up a little bit. And what I'm going to do is I like to try and keep my charts as clear as possible. So I'm just going to drop a horizontal line in there and a horizontal line right there. And that allows me to take away this fib extension, this fib retracement. And let me just get my template out and make that white. Okay. So what you have here is you have the 618 retracement of this leg here. Let me just show you from here to here. This is the 618 retracement of that leg. Now what the green line is an area. It's actually a 67.8 fib retracement, and the green line is going to be an area that I want. The market is manipulated all the time, and the area between the white line, which is 618, and the area between the green line, which is a 67.8, is where I'm looking for messing about with institutions, messing about with the market. Okay, manipulating the market. Okay, so that's why I've got a zone, because what the institutions are expecting, and this is the way we've all been trained as retail traders, we've all been trained that when price gets down to the 618, we trade. That's where we take our trades historically. And that's as a retail trader where I used to trade all the time, right off of that level. Institutions and the smart money know that's what we do, guys. And that's why we've got to be smarter than that. What they're looking at is they're looking at where gold is going to be a cheap buy. And this is the first level that comes to mind. And this is the first level that shows up. Okay, just keep that in your mind. 67, 61.8, 67.8. Now, what I like about this first level of supply shaded in green is that the 67.8 retracement lines up right with that pair. So in that area, we have two levels of confluence, okay? Two reasons to look at that level a bit more seriously. Let's now take a fib extension from this swing here down to this low and back up in. And is there anything that you see, guys? Can you see that? Here we have equal legs there, right on that 67.8 fib retracement. Not a hair above, not a hair below. Guys, you can't make this up. This is clockwork, okay? We now have three reasons to go to look at this area and see what's going to happen. Okay, so keep that in your mind. Fib extension right there on top of that 618. Anything else? Well, let's have a look, guys. Let's just have a look now. Let me just have a look. Now, I'm going to take you back in. I'm just going to see if this actually works out. Back in March 2020, okay, COVID, just as COVID was happening, okay, look what happened to gold. After gold had run up, look at this sell-off in gold. I'm just intrigued. So what I'm going to do here, so that pink line there is a sell-off in gold. Let's just have a look if that means anything moving forward. So what I like to do is I like to take a clone of that bar there. Let me just pull that forward. Guys, look at that. Can you see that? So this is the amount that back in March, this is the amount that gold sold off. If I pull that forward, that goes straight into the same area of what I've already looking at. Now, this is called harmonics, guys. And what happens is the market moves harmonically. In certain moves, certain moves are repeated later on off into the future. So I'm now looking that I've got 4 reasons to look at this level. I like this level, guys. Now, what happens when price comes into this level? Well, one thing's for sure, I'm not just looking at price this now. Let's say for argument's sake, what I'm trying to say is, let's say for argument's sake, price does make its way into this level. Remember, I don't know if price is going to get there or not, okay? But I'm interested in this level. This is now where I'm interested in price in gold going long, okay? I could be interested here. You know, let's be honest, I could be interested in this at this level here. If I can grab that tool again, I could be interested at this level here. You know, that's a very valid area where gold could potentially go take off to the upside again. But I'm not, guys. This is where the patience comes in. I know that I'm interested in that level and I know why. And I also am interested because there's just so much confluence in that area. So what I've done now is I've built a reason for price to potentially, or a level that price for potentially rebound off and go long again. Now let's just take a look at these other levels. Should gold just plummet through that level? Now remember, I took my first Fibonacci swing from this level here. Let's just go down to this area here. Now 10th of March, let's take that right up there. And look at that, guys. Look at where the 618 retracement comes in. The 618 retracement comes in right here, right where I took my 618 retracement of this swing. Again, you cannot make this stuff up, guys. The market is so systematic, it's so harmonic, it's unbelievable. So that area is another area that I'm going to be interested in should this area here fail. Okay, but I'm not gonna, it's, you know, it's a long way away and I'm not going to consider it for now because I'm considering it this area. But we also have another level of, sorry, not supply, another level of demand. And if I said supply for this area, I meant demand. The green is demand, okay? So we have another level of demand right here. So what's my trading plan? What's my system? What am I going to do here? Okay. One thing's for sure is I'm not going to sit here and watch the charts every day to hoping that price gets into that level. What I'm going to do is I'm going to set an alert. I'm going to set an alert right above that level, just there. Let's just get it now. Maybe because the market's closed is the reason that I can't. Maybe it won't allow me to. Will it allow me? Yes, it will allow me to set alert. Okay. So what I want to happen is as price crosses down into this area, I'm going to put on, here's the message to myself: be on alert for potential long. Okay, that's the message to myself. Be on alert for potential long. Now, there's the alert just there. I'm just going to drag the alert down because that's actually the area I want it to be in. And I'm going to save it. Excellent. So we now have an alert set in the market in gold. I'm going to ignore gold pretty much from now on. I'm going to see what happens. Price may not even get into that area, guys. Price may just continue up. And if so, then I've missed the potential. I've missed the trade, and that's what it is. But for sure, if price gets down into that level, what am I going to do? Well, let me just fatten up the chart. Let's just fatten up the chart and concentrate on that level. Here's the level down there. Now, what I do know is when price gets into that level, I'm going to receive an alert. What I'm then going to be looking at is whatever this leg is, this leg here, whatever that turns out to be, I'm only going to be interested in buying gold if the price has moved into that level in a certain manner. Okay? I'm not interested in price just going down there gung-ho, going down there, you know, God knows, in its own way. I'm going to be looking for price to get into that level in a certain manner. If price then reaches that level, I'm going to be looking for a reaction at that level, okay? And I'm going to wait, guys. I'm not just going to jump in. Unless something triggers, unless something shows me there that I should get in on that level, some sort of pattern turns up, I'm not gonna get in. But what I'm expecting to happen, there are a few things that I'm expecting to happen. when price gets down into the 618, I'm expecting a manipulation of the market, and I'm expecting the institutions to push price down into this level here. Okay, then I'm looking for a reaction. So I'm looking for, in this area here, in between the 618 and the 678, I'm looking for price to be manipulated. There is also potential for price to be manipulated right here into this next level here of demand. Okay, now one thing I want to say to you guys is this is not financial advice. I don't want you to trade anything that I'm saying here. What I'm actually saying to you is this is what I'm looking at. Under no circumstances do I want you to take my advice, do what I'm doing, follow what I'm doing. This is what I'm looking at, and it's important that I mention that to you because I don't want you to deem this as financial advice at all. But this is how I view the market, and this is how I break it down. Okay, so I'm not a financial advisor. I'm not licensed by any authority. I just view the market in this way, and I look at it this way. Don't want you to take my advice at all, but I like to show you how I view the market. So there is the potential here for price to come down into these levels and be manipulated, and then, even this could happen. Take out all of the longs and then bam. Okay, so guys, let's see what happens. This might not happen for weeks yet, if it happens at all. Okay, let's see what happens. But I just wanted to give you an example of how far ahead I view the markets. Now, this is what's important. It's now 23 minutes past 10 on the 21st of August 2020. I want you to keep an eye on that time, and if price gets there, we're then going to have a look at what date we're into, and let's see what happens. So traders, hope you enjoyed the little presentation there. Let's see what happens in this market, if at all, and let's see if we can't get long gold. Take care, traders. Have a great weekend. Use the weekend to hone your skill. Use it to backtest your system. Look at trades. Look at trades where you've won or lost in, and make sure you keep on top of your game. As far as we're concerned, or as far as I am concerned, let's just have a look at what we're looking at. Now, one of the things I wanted to say to you is you have to remember that I don't trade live, or my live account isn't with TradingView. Okay, TradingView is where I do my analysis. My live account is elsewhere. I actually use MT5 to place my live trades, but all of the analysis for those trades is based here in TradingView. So where are we so far? So let's have a look at what we're looking at. What am I looking for? Okay, just looking at the trades that we're in so far. So far we are currently short the British pound Swiss franc, and there's a way to go in that, but we're up. We're short the British pound Japanese yen, and again we're doing all right in that. The euro pound, as you can see, I'm very short the pound pair, and again that's all based on fundamentals. Short the euro pound, and okay, we're just up in that, and also we're long the euro pound, and we're short the US dollar Swiss franc, and we're up in that. So at the moment, the trades that we're in, they're going quite well. Let's see what happens, guys. Traders, have a great weekend, and I'll catch you all very, very soon. Take care, traders.